Okay, good morning, everyone. You're listening to the voice of Vision X, and this is an emergency video, very, very important because the market is about to go south. I get into it. It's very important that we look at this video today and analyze what's going on using gold as a leading indicator. So this is an emergency video using gold as a leading indicator. And in my previous video, I was talking about gold and using gold to um, find out if we are going to the bear market or we are still retaining the bullish market. And I told you precisely, if you follow my Telegram channel very well, that gold must not lose this $1,944 area, because if it does that, we're going down. That's the beginning of what a bear market. The market actually moves in waves, and if you don't understand the waves and the structures, if you don't understand wave structures and what's it called, the price action pattern and the concept in which the market uses in moving, you will make a lot of mistakes. And someone was asking me last week that why am I saying that this particular area is very, very important in this market. That is because according to the price action perspective, if I should, first of all, according to the price action perspective, this was, what's it called, the last high we had, and we actually broke this structure to the downside. I get changing character to the downside. So since then, we're on these, what's it called, we're inside this falling wedge, which is a flag also, and a bullish continuation pattern to the upside. But you see this particular place, as you're seeing here right now, this is going to invalidate the bullish flag we have here if we fail to break it back to the upside. So this is what I'm trying to explain to you, that until you understand structures, you will not know whatever is happening in the market. So from whatever we have here right now, I don't know if I'll be able to go into much details, but you see this little thing happening here right now will either define whether the bear market or the bull market, because this is a head and shoulders pattern, the last resort. Let me even use it as a last resort, because after breaking the structure to the upside, after being inside this bearish flag, what's it called, falling wedge for a very long time, we are expected to, we broke back into it. I don't know, my network, just hold on a little. So actually, we broke back. This was the what's it called, the bullish phase. So we are not supposed to lose this bullish phase again. Anything that makes us lose that bullish phase, as you can see, let me refresh. Follow up, just follow up. This is very important, very, very important. With this, you can, use as, I'm just using gold as a leading indicator. You can also use it to determine what's going to happen on your Euro, USD, what's it called, all your risk asset, USD pairs risk asset like Euro, USD, GP, what's it called, Euro, USD, GP, USD, ED, USD, what's it called, the currency pairs against the dollar. Then what other again can I, what's it, like the indices, like the cryptocurrencies. I'm trying to use gold as a leading indicator of telling me whatever is happening, because if gold and Euro USD is going down, every other USD pair will go down also, and it will also affect what's it called, the cryptos, because they are all USD pairs. And as well as stock market last week, what's it called, printed weekly bearish. The Nasdaq printed a weekly bearish engulfing. The S&P 500 printed a weekly bearish engulfing. Some of the stocks also printed a weekly bearish engulfing. So using gold as a leading indicator, is this the starting of a bear market? Because if we lose here, look at this place we are seeing right now, 1930 to 1944. You might think that what effect does it has on what's it called, this video I'm doing. The effect is that if we lose here, this particular support will not hold. Why? Because let me give you reasons. Why? Because if we go to the higher time frame, let me see if I can get on that chart. Why? Because let me take all this one. So why? Because if we lose this particular, what's it called, right now, we lose this particular support we have here right now, I guess, in which was a previous resistance, are you getting it? We now found a head and shoulders pattern, wherever you call it, a W pattern. We broke back inside that. Then we are supposed to retest and continue going to the upside. Are you getting it? So for us to break back into it and falling back into it again, this particular 1900 support will not hold. Why? Because we have failed to print something called a head and shoulders pattern. Are you getting it? Because we had the previous resistance here, and the entire market has been what? Follow up, don't get carried away. The way the manner in which you drive your price action is very, very important, because that will let you know that, okay, overall this market was what? Bullish, broke structure to the upside, then retraced to the downside, then it's supposed to continue doing what? Breaking structures and continue to the upside. You see this particular thing happening here right now is invalidating this whole structure, this whole bullish structure that I just drew for you here right now. Because if we break down from this particular structure, we will change structure to an ABC move, which is a bigger move, because this whole area, if you measure it very well, you will see that this whole area is 0.5 financial retracement, this previous resistance zone. Are you getting it? So this previous resistance on the bearish side is 0.5 retracement zone, and this was a change of character to the downside. We broke structure to the upside, as in we broke structure to the upside. We immediately, after some days, we did a change of character to the downside. So if that change of character prevails, as you can see right now, this change of character is going to prevail to form a bearish market. If I might be, talking interchangeably, but I'm just trying to let you know that this is an emergency for all USD assets, and all other USD assets will go into a bearish market if we fail to hold this particular structure. Are you getting it? So what I'm trying to tell you right now is that, how do I know that we're about going to a bear market? That is because if that particular, what's it called, 1930 to 1940 support fails, this market has found a resistance at 1980, major resistance at 1980, and we're driving but using the Fibonacci trend extension, this change of character that is about to be validated right now, we'll be driving this market to 1850 or $1,850 or $1,880. I've said this before about in my previous videos. I think in the month of June, when I was doing these videos, I was like, okay, if we fail to break this to the upside and continue this market, and this market breaks down, it, and continue to the downside, our target has always been 1,880. It, and the last target has always been 1,850. So this is an emergency. And how do you know that? How do I know that this market will not survive if we break this 1930 support and fails to recover 19? What's it called? That is because I've been following structures. Market moves in waves. I've been following all the wave of the market, and the last result we had was this head and shoulders pattern that is broken right now, and we're testing. And what is it? Look at it. This is a head and shoulders pattern, which is a bullish case. What's it called? It's a bearish case scenario that has broken down right now, and we're testing. So we must not break and change character to the down, as in continue breaking structure to the downside by losing this particular support, which you're about losing right now. Again, so if we lose this particular, if we lose this particular, recovery I'm expecting for this head and shoulders pattern, and the head and shoulders pattern is doing a break and retest, as you can see, and this head and shoulders pattern is doing a break and retest. Our target is 1,900, 1,905 area, which we will definitely get there, but it will not hold because the structure does not permit, are you getting, that this becomes a major what's it called? Because only one area of value that you have there, only one structure that you have there, which is only this one. So there are not two touches or multiple touches that can save it. I guess. And so whatever is happening right now, if you are in a position already, please, if you're in a bullish position already, or any of your trade I told you about 1935 and 1937 and 1930 triggered, please leave that market right now and wait for this market to either, I told you it's very, very important that we close above, we recover this head and shoulders pattern. I guess I told you that it's important and we recover this head and shoulders pattern. I get break and recover, retest before we can start buying to continue going up. Right now, it's printing, the peers are taking over. I gave that one in last week that we must not, find the resistance. The problem, no one will find that resistance or coming back to 1,900, which is happening right now. Again, so we've broken down from the head and shoulders pattern, and we are recovering. So anything that is making us, break structure again, this is an entry and stop loss under here to take us to 1,900 and 1,880 to 1,850 area to complete this particular wave of if I go to the higher time frame, you see the wave happening on the daily right now. And what's the wave? Look at it. Change your character to the downside, coming back to retrace 0.5 and continuation of the market to the next available what's it called, demand zone or support. So this is the other block we have to come back into, which is at 1,850. And if you measure it very well on the higher time frame, you see that this market is about invalidating the bullish market and coming to the bearish market. And this is the other block area or the support, $1,800, the only support we have. If we lose this particular, if you know how to drive your market, you should know that if we lose this particular, what's it called, right now, the market will be in a very, very big mess by coming back to 1,800. So impute that into your other asset, like maybe I've been driving this USD, and I was telling you that we must do what? Break back into this previous what's it called, support and resistance zone. We've broken down from this. If I go to the file so that it will be clearer, look, the market itself has broken a previous higher time frame, what's it called, high. And if I should even go back and just drive this, what we have here, look at this market right now is invalidating this particular structure by trying to break to the downside. So whatever I have here right now in this structure I have here right now, the file chart, I guess is printing a double top. It's printing a double top here right now, I guess, and a break below is a continuation of this market towards to the downside. So anyhow you find your market, anyhow you drive your market, is important that you know what is happening. But I'm using gold as a leading indicator of whatever is happening in this market by shifting this market to the downside, which means that this was a very, very, very strong, are you getting it? Strong resistance at the upside. So I will come doing an ABC move to the downside to find to 1,850 to find demand before coming back up. To find out, but it's important that you know how to do it. Drive your market with market structure, with your price action and your price action perspective. So going back to the Farley chart, conclusively, the market is not supposed to lose this particular little 1,100 pips you are seeing here from 1,930 to 1,940. And apart from losing it, the only way the bull market will continue is reclaiming this as a fake out. But you can see that it's not happening. So during the Asian session, when the market opened this week of, what's it called? Today is 7th, when the market opened this week, and the early hours of the 7th of August 2023, you can see that the market actually found that particular structural formation breakdown and retest. So This is a breakdown and retest that just happened of the head and shoulders pattern. This is a retest and actually printed a bearish engulfing, which is a leading bearish indicator that this market is about going to 1,900 and facing the 1,880 to 1,850 order block and the 1,800 support zone. So 1,800 support zone and the 1,850 what's it called, order block or demand zone. So this is a leading indicator that this market is about going down right now, because it's printing everything for you to see. First of all, a head and shoulders pattern. The first thing it's showing you is, first of all, a head and shoulders pattern, a break of the head and shoulders pattern, and a retest and giving you a bearish signal, which is a bearish engulfing candle. So if I'm in any position already and I'm in losses, I'll take my losses, and I will not take my losses until this particular, what's it called, break. So my losses, my stop loss is at 1,930, and I'll show you something why I am not taking that loss yet. But I will still be entering. I've entered some positions from 1937 just now before I started this video. Yeah, what's it called? Some sell positions to counter trend and put my stop loss. That's why we have what is called CMDs, and you don't attach emotions into this market by trying to, um, oh, network is misbehaving. Just hold on. By trying to do what? Apply sentiments that you need a bullish market. Let the market do whatever it wants to do. You have your market structure already. You have your price action perspective there to guide you. So let the market do whatever it wants to do. While you yourself does what? Follow the trend. The trend is your friend. It switches to the downside, no problem. If you are a swing trader, you are a scalper, this is how you should look at your market. Don't look at your market like, oh, I need a bullish market. No, you cannot control the market. The market makers controls the market. Yours is just to drive the market. Whatever I'm seeing here right now is seriously bearish for this is a bearish engulfing after a break and retest. This is a break of the head and shoulders pattern, and it's printing a bearish engulfing. So don't try to force the market. If you are seeing a discount to leave, you should leave. Yes, but right now, even though to the 1 hourly time frame, the price action I'm saying there is that, okay, even though we say that, which I don't usually trust the lower time frame structures other than lower than the 4 hourly chart. Okay, even though this is a change of character, this whole area becomes our new demand zone. And are we going to dry off the, are you getting it, on the 1 hourly time frame? This is what you're about to find out right now. So the 1 hour time frame, this is the only demand zone we have right now, and I'm not seeing any bullish, bullish price action happening. Are you seeing any bullish price action happening? I'm not seeing any bullish price action happening. So what I just want right now is that I'll probably be on my 15 minutes time frame. I get looking for any bullish price action that is happening, and I'm not seeing any bullish price action happening. And what do I mean by price action? I'm not seeing any double bottom, any double bullish engulfing. I get it. I'm not seeing anything, and this market is not even breaking above, and switching on the lower time frame for me to find entry to continue the upside. So the peers have the market as it stands. So use that as your lead indicator. Get out of any market you want to get out on. Are you getting it? If you have over leverage, close some of your leverage positions. Are you getting it? And prepare for the downside. Are you getting it? Prepare for the downside, because whatever is happening right now, you should know how to drive your market from even your lower, your 3 minutes, your 1 minute time frame. You should have the sense of what is happening already. And the only way right now, we are still breaking structures to the downside. Are you getting it? Creating lower low, lower high, lower low, lower low, lower high, lower low, lower high. Then on that lower low, I just printed right now. So the market trending on your lower time frame, in case you want to scalp it, you have been taking all these from 1937 to 1934. That's about 30 pips. Are you getting? So don't try to say, oh, you are expecting this market to move back to the upside. You will only enjoy yourself by trying to do that emotionally. So follow whatever the market is doing. Whatever it does not concern you. But you know that you have what is happening on the higher time frame in your head already. All you just have to do is, probably bid for a change of character, find a bullish change of character to the upside, Yes, because even on a lower time frame, it's trending perfectly well. We broke this particular, what's it called? Zero. Okay, let me show you the last result before I end this video. If I should go to probably my 4-hourly chart, if truly this was a, what's it called? If truly, let me give you on that scenario again. If truly this was a, what's it called? Um, uh, a bullish market, let me drive something for you. How I drive the market. This was the last high we had, and this was a double top because we broke structure to the downside and we went to the supply zone. Are you getting it? That's I'm driving the waves now. We went to that supply, we found supply, I came and broke structure again. So are we supposed to? We are still bearish until we see a switch. So as you can see, what is happening here again now? If you use your Fibonacci retracement tools from the high to the bottom, you can see that we're retracing from 0.382. And if you drive that market very well, use your fib trend extension levels, you should know that we're coming to 1,900 area, even though you are swinging the lower time frame. So our last result is 1,908 or 1,910 area. We must get there. Immediately this breaks, we must get here because we are doing an ABC, moves to the downside internally, if you know how to drive your market this way. So don't FOMO, don't assistant, don't think that, oh, this support must hold. Look at every the positive side, sorry, the bearish case scenario, look at the bullish case scenario. Anyone that flows for you, apply it, and USD, what's it called? Gold will not be going down, USD will be going up, or gold will not be coming down, GBUSD will be going up, or Bitcoin will be going up, or your indices will be going up. No, use gold as an indicator. That's why I'll tag this video, emergency video. We're about to lose 1,940 and 1,930 support, and we have to look at 1,940. And as it stands right now, this market is bearish. Are you getting? So light, and this is my strategy, and this is how I look at the market, and that's always helped me from day one. Are you getting? So apply it. If you have any other questions, you know where to contact me on Telegram or my WhatsApp, or any of my social media platforms, Instagram, anywhere, to tell you to trade this market with. But as you are seeing, the market is extremely bearish, and this is the only leading indicator of whether we are going bearish or we are turn bullish. But from every indication, the market is about turning bearish. So I will end here right now so I can enter into my trades. Take care and bye for now. Bye bye.